when the market's confused. Steve strolls in with a chart and some probable news. Troy fires up Omega like, let's model this mess, while traders at home whisper, please help me stress test. It's the show where the candles dance. Volatility takes its chance. Steve says rules, Troy says math. Together they chart a hilarious path. Grab your lunch, don't be late. They'll tell you why the market's weird again. Oh, great. They're calling out levels, volatility rebels, equity drama, and index devils. One guy's calm, the other's pressing buttons fast. Is this bullish? Is this bearish? Ah, depends on the past. So tune in, laugh, and maybe learn to. These two make the chaos look almost doable for you. Every Tuesday at noon, hit that stream real quick, because markets are wild, and these two are slick.
Afternoon, everybody. Hope you guys
are
doing well. With me is the impeccable, incredible Steve from Navigation Trading. I don't know,
Troy, this is the session where I glaze you, remember?
Oh, yeah.
Sorry. It was all about me. This time it's all about you.
I got the order wrong. So listen, glad you guys are here today on this market confused day. And it does seem, Steve, that the market is confused a little bit. What's happening today?
Well, it looks like Santa's rally has turned into a little bit of a Santa slide, Troy.
I like that action.
Yeah, I don't know. I mean, we got, chip stocks are pretty weak. A lot of talk about, the whole AI bubble maybe being a little bit overdone. I don't know. I really don't pay too much attention to the why. I try to, because then I get into a mindset of trying to predict, and that never has worked well for me. So I try to avoid opinions and just react as hard as it may be, because of the news environment that we're always in.
Yeah, for sure. And we always are in a news environment. That's the reality of it right now. So there's always something going on. I know you.
By the way, Troy, Tom Lee did post in our community that he wanted to hear your macro thesis for 2026. So
yeah, my macro thesis, one of the quickest ways, there are a lot of different ways you can lose money quickly. One of the quickest ways would be by listening to my macro thesis about the economy. So I'll save you guys the trouble of that. But in general, stocks go up. That's always been a safe assumption. I hate it, but stocks go up. But we don't just buy stocks here. We trade options. So Steve, what have you been doing today? I know you've been taking some positions.
Yeah, two things. One, I took a 1 DTE Iron Condor in SPX, which I tend to take almost every day if we have a little bit of an overnight VIX expansion. So we get those a little bit expansion in volatility, makes those premiums a little bit more juiced, tends to work out better. So I typically enter that pretty close to the open. So I've got that on. And then I will either book profits on that later if it stays in range, or a lot of times I do what I call a transformer, where if I have a decent amount of profit, usually like 20+% of credit already kind of built in. If it's gotten to that point, then sometimes I will remove the risk and then take more of a directional assumption and hold it overnight until the next day's expiration. So if I have a little bit of a bullish, I'll transform it into like a risk-free bullish vertical spread and then let it expire. So I'll have kind of a minimum guaranteed profit or a maximum guaranteed profit, but all risk removed. So that's one thing I've done, and I haven't done anything with it yet. I think it's up about 20% at this point. The other thing that I do every day is what we call British iron condors, where it's kind of like a version of MEIC, where
The old
kind of
VIX.
managing the put and the call vertical side separately. So that I just have those on automation,
Yeah.
just cranking out tranches all day.
Have you noticed with those, Steve, like doing DCs a lot? Do they correlate, or are they pretty well uncorrelated? Like those kind of daily range bound trades. Have you noticed that those are winning when DCs are losing, and vice versa? Or have you really kind of seen much correlation between them?
No, I haven't. No, I haven't really noticed too much correlation around that. I think for double calendars, and I haven't been doing a lot of those,
Yeah.
especially overnight type positions, since about April of this year, anyway. But
Yeah.
those are just so dependent on, obviously price needs to stay within the range of that double calendar, but also they're so dependent on what the volatility is doing between the front and the back options. And so some of that depends on what news events those shorts and longs fall on. So if you're doing a 6-7 double calendar, for example, what news events are on the short options and what news events are on the long options, and sometimes that can have an effect. So from a correlation standpoint, no, I don't see much of a correlation between kind of the iron condors and double calendars really at all.
That makes sense. And then have you done any I know, did I see a Tesla position earlier today?
Yeah, I've taken 3 directional day trades, one in Tesla, one in Hood, and one in, what was the other one I did? Tesla, Hood, and Meta. Yeah.
Okay. And then Tom wanted us to remind us that you just said 6-7 a bunch. So
I can't help it,
it
I
is
just
what it
can't help
is.
it.
Yeah. Yours, you have cool kids in your house at this point and age wise, and I have cool kids, and that makes us really cool dads. I know my teenagers love it when I say 6-7 a lot in public. So, and I'll dap them up and all those things. So, you
Yep.
know,
Oh,
it
yeah, they
makes
love
sense.
that.
It makes sense to me. So, uh, Steve, one of the things last week, we talked about how you have kind of transformed, pun intended, your trading, in some ways since April. And one of the things I've always appreciated about you is you kind of go with the flow, and profit from it. There's plenty of people that go with the flow and lose money every time they change, uh, but you talked a lot about how you kind of day trade options, in a way that you didn't before. And I know you've been working on some stuff, but I'd be interested to know, like, for people who asked this past week, like, I have no idea how to do that. I didn't even know that was something that Navigation did. Can you kind of give some ground rules about what you're looking for and things like that?
Yeah, we started, and when I say we, myself and Landon, who's part of the team, have been putting together a few kind of like one pagers to really kind of simplify what I'm doing.
Yeah,
And, and so I can share those. And in fact, I'll share my screen, and I don't know how you want to, you can share these as PDFs with the community.
yeah,
Um, I'm not sure how you want to do
yeah.
that.
We'll send.
That up to you.
Well, I'll look. I'm not a smart man, but we'll see if we can get them in the YouTube description later today. We'll put them in the show, as the popular podcasters say. We'll put them in the show notes, Steve. Yeah,
Perfect.
yeah,
Let me share. Let me pull these up. I'll share my screen here.
yep,
Okay. Do you see my screen?
yep.
Okay. So the first one that I'll share is what I just call a reversal trading strategy. And by the way, these are not like groundbreaking strategies by any means. I mean, these when I first started trading in 1999, early 2000, I was trading all directional. So these are just kind of things that, some of the first things that I learned in trading. So these are not something that I made up or anything like that. I mean, these are pretty, if you've been trading directionally or price action, these are things that you've probably done or seen before. But basically what I'm looking at is, the first one is what I call a reversal strategy. And so there are many different ways. If a stock is selling off or if an index is selling off, there are a lot of ways to decide when to take a long position when it starts to reverse. What I've found works the best for me, um, because I've done it, and I learned this the hard way, of course, and that is, sometimes I would just take long positions at specific key levels. Like on this example, I'm showing like a previous day high that I use as one of my levels, and just trying to take a long at those levels. The problem is, without getting some type of confirmation, a lot of times I would just get smoked, right? Price would just smoke right through that level, and I'd be like, okay, that was fun, and I'd take a loss. What I've found works better is waiting for a little bit better confirmation. And so what I look for, if something is selling off, like I'm showing here in this example, I want to see a pretty aggressive bounce, and then I want to see it sell off again and fail, and then kind of resume with a decent, you know, resumption on the way back up, for example. And so I would enter once it starts get a failed sell off and it starts bouncing again. So that's where I would look to take a long after we're seeing a big sell off. I also like to do it around a key level, like a previous day high, a previous pivot point, pre-market high, pre-market, whatever it is, some type of key level where the market has reversed in the past. And that's kind of what I use as a key level. And so that would be kind of the setup that I'm looking for before I would take a long if price is starting to sell off.
Couple
Okay.
couple things real quick, if you don't mind.
Yep.
Is HF Man One says, is this a 5-minute chart, or do you know a chart time frame?
Well, the time frame doesn't necessarily matter. The time frames that I look at, I mean, I always look at a daily chart and an hourly chart, and that's where I kind of mark a lot of my major levels from. And then I go down to a 15-minute chart and kind of do the same thing and look for context that way. Most of my execution is off the 5-minute. And so yeah, this example here would be on a 5-minute chart, correct?
Okay. And then the thing
But
that I've always struggled with picking a direction with options trading, you're kind of pointing to something that on paper seems really easy, but I have found it to be difficult, and I would love to kind of have your opinion on this. That where I always have entered is that first thing you just said. It's like the first sign of a failure. So 3 bars before that, like as soon as the red candle ends, that first green candle,
oh, this
I'm
one
yeah.
here.
And
Okay.
sometimes I would try to even front run it where it's like if the bar we didn't have much movement to the downside. We've had large movement and then that volume kind of dries up to the downside. I have always gotten wrecked on that, to be honest, because I know what I'm doing. I'm trying to time it too perfectly. I'm
Mhm.
not I'm trying to get every point I can out of it. Whereas you're saying, no, you can get paid to wait for validation. That actually works to wait for validation. Can you speak to
Yeah,
that?
I have the tendency to want to do the same thing. I have the tendency to want to catch the very bottom and very top. I think a lot of traders do, but really what it comes down to is waiting for that extra confirmation and just trying to take a little bit of the meat out of the middle as opposed to trying to catch every exact top and exact bottom.
Yeah.
Trying to do that has always burned me as well.
Yeah.
And I've like I said, I've learned the hard way, which is taking losses. That's the best teacher, and it has been for me anyway.
No, that makes sense. Well, please continue. I just wanted to ask those 2 things. Mhm.
So this is one thing that I use, kind of a basis or a concept that I use to catch, a reversal if we're kind of moving in one direction. And this is whether it's moving down and I'm trying to catch a reversal to the upside, or if we're just going kind of straight up and I'm looking for a place for price to potentially reverse and go back down. It works the same way, just in inverse. But that's kind of the basis of that. And the reason I'm showing you this first is because I used this concept today on one of my trades. I didn't actually take a reversal, but I'll show you the context that I use it
Yeah.
for the trades that I took today. The other kind of concept that I'll use a lot is just your typical trend line break strategy.
Mm.
And so the way that this works is, if I'm going long, I want to see some strength initially, maybe a little bit of choppiness. You might call that a flag, bull flag, or a wedge, or there's different names for it. But then I want to see some pretty decent momentum pushing and breaking above that trend line to get long. And I would wait for that to happen before I would get long. And then same thing in reverse. You see some pretty decent weakness, a little bit of choppiness, and then another break of that trend line to get short. So I took one of those today as well. And then the runner strategy, this is just kind of, you may have heard, kind of a break and retest, or, there are other names that other folks have for it, but I just call it the runner, because I'm basically, on the upside, I'm looking for initial strength. I'm looking for a pullback to a key level. And then I'm looking for some strength that it's going to hold to get long. And I'm getting long, and I'm using that key level as kind of my line in the sand. So then if I get like a 5-minute close below that, I'll cut it. So the goal here is you always have a line in the sand, always have a key level that you're managing risk around. And if it goes below that, you're cutting your risk quickly. But if it holds and it does what you hope it does, then you can have a significant risk versus reward, or reward versus risk, because it just builds in that ability to cut your losers quickly and let your winners run, which is the whole basis of directional trading.
What
Uh,
oh, go ahead,
go ahead.
please. When I was
So-
going to ask, I got you. I interrupted again. One of the real quick, the bar, like when you're doing a break like that, do you wait for the bar to get to the first closing bar, or if there's movement inside the bar, will you treat that as the go zone?
I don't necessarily wait for a 5-minute close. In fact, sometimes I'll go down into it when I'm seeing this set up on like a 5 or a 15-minute chart. Sometimes I'll even go down to a lower time frame, like even a 1 or a 2-minute chart, because I want to execute that as quickly as possible and as close to that level as possible. A lot can happen in 5 minutes. So I don't necessarily want to always wait for full 5 minutes for that bar to close. But I'm looking for a reaction. I'm looking for some buyers to step in if I'm getting long. In this example, you can see it's pretty clear. It kind of comes down and you get this big wick and it holds back above that level. I would probably be getting in right at that, after that wick candle closed, because that's just showing me that, hey, the sellers tried to push this price down, buyers bought it back up, it's holding that level. It's really close to that level, so I can manage my risk very tightly, if it comes back down. And so that's it, just depends. But a lot of times I'll go down to a lower time frame to get those executions as precise as possible.
Yeah, no, that's great. So I'm gonna stop interrupting for a second, please.
That's okay. I just wanted to show all these three 1-pagers, and because I actually used every single one of them today on the 3 trades that I took. So let me pull up my Thinkorswim here. And so let's go to Meta. This was the first one that I took. So if I go to a 5-minute chart, what I was looking for in Meta is Meta started off really strong. This is a 5-minute chart, and it pushed. It started off red, but it pushed immediately into green territory. So this red line is yesterday's close. So anything above that means Meta is green on the day. It also coincided with the pre-market high. So if you have a couple of key levels like that together, I like that as well. It's kind of adds confluence to that specific level. So Meta pushed up, and then it pulled back here. And when it started to bounce and hold previous day low and previous day close and pre-market highs, and then this other green line I have on here, that's a level that I have from like the daily chart, from going back to 1128. So all those things kind of lined up. And it had relative strength compared to the rest of the market. So all those things together were kind of gave me more confidence in entering the trade. And so I entered somewhere in here. I can't remember exactly what time I entered. In fact, let me tell you. I entered at I entered at 846
Central.
Central.
Yeah.
So that would be on this bar here. So somewhere in this bar, I entered, and caught it a pretty quick move up to previous day high. So I kind of scaled out of it as it pushed to new highs of day, as it pushed a little bit more. I was out of the vast majority of my position once it hit previous day high, because that was kind of my original target. I left a little bit of a runner on to see if this thing was really going to have some legs and continue higher. And when it rejected previous day high, I cut the last one, and so I was out of the trade.
That's one of the things someone's asked is, what kind of profit targets do you set? It sounds like you might try to do a profit target based on like levels, perhaps.
I do. Yeah. I used to use percentages. And the reason that I've gotten away from using a specific percentage is because, and I think I talked about this a little bit last time with position sizing, and that is, if I'm trading 0 DTE or I'm trading 7 DTE, if it's a Friday, I have the option to either choose 0 DTE or 7 DTE. Well, those trade significantly different, right? If I'm trading 0 DTE, hitting a 10% profit is a couple of ticks, right? That can happen so fast. But trading 7 DTE, the underlying stock is going to have to travel a lot further for me to hit that. So using percentages just doesn't really make sense in my mind. So yeah, I'm really looking for levels. If I'm looking at a pullback and I'm getting in near a key level, typically my first profit target is when it breaks high of day again. And then I'm really just trying to, I'm trying to look at other potential key levels. I'll go to a higher time frame chart and just see if there's any kind of key pivot levels that I can use to manage. If not, I'm just kind of doing my best to squeeze as much out of the trade as I possibly can, with that ultimate target, in this case, being another key level, which was yesterday's high.
And I've seen you trade these before with really, I think, all three strategies. And my understanding of it, correct me if I'm wrong, is you don't wait around for it to do what you demand for it to do. Like if it's not behaving the way it should, you'll cut it. Is that correct?
Yeah, I'll cut it if I get a 5-minute close below my level, and I'll get it, and I will cut it if it just sits there and chops. Part of my plan is I don't want to sit through chop for more
Yeah.
than minutes. So if it's just sitting there going sideways, falls asleep, I kind of want to get out, because it's just I'm using mental capital, because I've got to sit there and watch it, and I've found that typically doesn't do well for my psyche.
I think that's a great point, and a great, if you're taking notes and maybe learning how to do this, like chop is mental capital. That's an important part of this, that especially if you're doing more than one of these, you start getting antsy, it just doesn't help any of the things that you're trying to accomplish when it's sitting there. So can it turn around? Certainly it can turn around, but also it can go the other way, and that's kind of the numbers game of it.
Right.
So
yeah, I want to get in things that are moving. I want to get in, get my piece, and get out. Really.
That's
this type of
a
trading.
question I had is, what stocks would you suggest people look for when doing this type of trading?
Yeah, really just all the big ones that, all the most actively traded. I have 3 different kind of what I call boards that I have put together. So one of them is kind of the Mag 7. One of them is all the big chip stocks, NVIDIA, AVGO, TSM, AMD, MU, all those. And then I've got a board with the financials and the cryptos. So I've got the big banks, which I really don't trade too much because they're kind of slower movers, but I want to see what the financials are doing. And then cryptos, MSTR, Coinbase, Robinhood, and then a couple other kind of stragglers would be like PLTR, and just your active, heavily traded, super liquid tech stocks for the most part.
Yeah, no, that makes sense. And I imagine you have them kind of like just what you said. You have a board of different charts for the biggest ones, and then the next kind of tier, like you just said.
Right. So I can show you an example here. So like, here's my Mag 7 board, Mag 7 plus Netflix. And so that's how I have it set up. I just have it 5-minute charts. The lines on here represent the previous day, high, low, and close. And so it just gives me a quick reference. I mean, I can kind of scan across these to see what's moving. And then I have a similar board for the chip stocks. And I've got multiple monitors, so I can kind of scan through these and see what's going on in the different sectors pretty quickly.
Are you drawing those each morning, the previous, or is that something that Thinkorswim is doing for you?
Yeah, it's just an indicator that it show up automatically.
I got you. And then I notice, probably other people notice that your charts, the colors don't match their charts. What is going on with this white chart bar, Steve?
Yeah, I changed that up. I think it was last year, or maybe a couple years ago. It was sometime last year. And I read something just about the psychology of the red and green candles, and green represents greed, and red represents fear. And so I'm trying to take as much emotion out of these trades as possible. So
Yeah,
it was interesting. And so I changed all my charts to this gray scale. So the up candles are kind of hollow, and the down candles are white. And I can't change the volume, so it's still red and green. But
sure.
what's funny about that is, after I did that, now if I pull up a chart that I haven't done that to, and it's got the red and green candles, it's like I'm like
You're
blind
blinded.
looking at the sun. I'm like, oh, so I don't know. Maybe it has, maybe it's had an effect, maybe it hasn't. I don't know, but I like the gray and white.
Yeah, I like that. I had played with a while for I can't pronounce anything. Hiken Ashy Hiken. And I had forgot I put them on, and then after a while, it's like, these days are just like either up or down completely. And I'd forgot that, like, no, there's a lot of chop if you take those candles off, because I don't remember exactly how Hiken Ashley's created, but it basically makes the idea of saying we're trending. It shows trends in a way
Right.
that's otherwise. So it can have an emotional state on you, though, for sure. So I get that. So do you mind going like into detail? Just, we can pick any stock and just kind of like things to watch for, how your eye is kind of catching it, and what would a move look like? Would that be okay?
Yeah. Yeah. So I kind of went over the example with Meta. Maybe I'll just use another one that I took today to kind of give you an idea.
Yeah.
I'm looking at the boards that I showed you, but another one that I took was Hood, and this didn't really get much follow through, but it was strong all morning. It held above pre-market highs. It showed strength all the way up to previous day high, and then it pulled back, and the market was getting really weak. The S&P, NASDAQ were starting to trade through lows. So if I want to go long, I'm looking for stocks with relative strength versus the S&P or the NASDAQ. If I'm looking to go short, I want stocks that had relative weakness versus the indices. So Hood and Tesla, two other ones that I took besides Meta, both had relative strength. And Hood had kind of had a really strong morning and then pulled back and started forming this little trend line here. So this was another one that I saw that once it kind of broke out of this trend line, this is where I got long. Basically after this candle closed, or shortly after, made a quick push up. I hit a first profit target, and then I kind of drew this little line on this little peak here, and and it started to chop around. And I was like, if it starts going below this, I'm just going to cut it, because I don't want to get back any more profits. And that's what happened. So I just cut it. So I hit a first profit target. So it was a small winner.
Yeah.
The other one was Tesla. And kind of same thing. Tesla had a strong morning, pushed all the way up to previous day high. It pulled back. It was holding pre-market highs. And so when it was holding, I didn't do anything here because the market kept dropping. And so I was wanting to see how strong Tesla would hold up. And it held. And then it kind of had this candle right here is where I entered. It kind of made a quick head fake below and then popped right back up. And so that's where I entered, using the pre-market highs as my line in the sand. Again, I caught a first profit target right here, and then it started to get weak, and the market started getting really weak. So I ended up just cutting out of it, partly because I was getting ready to do this show, and partly just because I thought, this market's a little bit too weak for my liking.
Yeah.
Looks like it would have rebounded some, but that's okay. It was a quick trade, so
Yeah.
I'm okay with it.
Well,
So those are, all three of these that I took. I used the trend line break. Oh, and then the other reason that I jumped in Tesla and Hood, I was in both of those kind of at the same time. And I usually only like to be in one trade at a time, but in this case, I jumped in two pretty close to back. And the reason is because I was looking at the S&P, and it ended up putting in that reversal pattern that I talked about from that PDF. So it had been weak all morning, weak, flushing through lows of day, made a pretty aggressive bounce, then tried to sell off again and got bought back up pretty quickly. So right in this area, that's the exact reversal pattern that I just talked about. So I didn't take a reversal in SPY, which looks like it wouldn't have worked out that well anyway, but I used that basis in the index to jump in relatively stronger stocks like Hood and Tesla.
No, it makes total sense.
So that's kind of what I'm just kind of spitballing. That was kind of my thought process this morning.
Yeah, a couple things. I mean, first off, this is really good stuff. I mean, because again, you're doing this every day, so it's not some theoretical like, here's what happens if you do this. It's like, here's PDFs basically that's saying like, this is how I do it, and this is how I did it, and here's the example of it. That's always kind of the best way to look at this type of stuff. Two things, someone says, if you're just trading directionally, why don't you just hit up ES or NQ futures? I presume they're say futures, or maybe they're talking about options, but why not just do the indexes? Do you find that there's something that the options give you that the stocks give you that the indexes don't?
Yeah, well, first of all, yeah, you can have pretty explosive moves in stocks a lot of times versus an index. So that would be one thing. I think, and maybe what they're referring to, and I think maybe the better question is, if I'm trading options in SPY or SPX, why not just trade ES? And I'm kind of down with that argument too. If you're SPY, SPX, they do have 0 DTE options, so that you can risk a little with defined risk and have some pretty explosive moves with 0 DTE. So I would argue I would say there is an argument for trading like 0 DTE long options if you get that move that's really quick in your favor. But I would also agree with the argument that why not just trade the futures, because you can have a very good stop in there. You don't have to worry about theta decay, all that good stuff. I totally get it. And I trade futures too, so I'm not against it by any means. But I would say on these directional trades, the vast majority of them that I do are on stocks. So I would say if individual stocks had futures, I would probably highly consider doing those.
Yeah.
They don't. And then the other thing would be, if I do trade options on an index, I'm typically trading 0 or 1 DTE. So if I do get a quick move, you can get some of that explosive, delta gamma working in your favor, which can outpace futures.
Yeah. No, I think I knew you did futures, so I wanted to give you the opportunity to talk about that. Yeah, you do that as well. But to your point, I mean, on any given day, if the ES, this is completely made up numbers, but let's say on any given day, the ES range is 1/3%, right? Well, on any given day, there's tons of stocks that are at 0.5% or 0.75%. So there's just room for more movement, to those playing reversals and things like that. And so
I would say it's even more than that. I would
Probably.
say, I mean, there are many times where the S&P moves 1/3% or 0.5%, and Tesla or Nvidia move 4%, or AMD 3.5%. So I think it's
Yeah.
even more than that a lot of times.
Yeah, I mean, you could, and some days are the same. So I think about like a couple weeks ago, was it after Nvidia earnings where it gapped up Nvidia gapped up like 12 points or something like that.
Mhm.
Well, by the time the day was over, it'd given up like 24 points. That's a huge move relative even to what the S&P did, which was a pretty huge move itself. So
Right.
things like that happen all the time in the world. Real quick, Steve, would you be up for Landon Grunberg? Shout out Landon. Said Landon came in with another question. Could you look at AFRM real quick? He said that's a good example too. There was a trend line break that held right above PDH.
Affirm. Haven't traded that one in a while.
So is that, would love to get your eye on that. Like, are you seeing the same thing he's seeing? What do you think of that?
Yeah, that's a really nice one. Several things. One, it has relative strength versus the market. I mean, it's up over 10% today. That's a perfect example
That'll
of
do it. Yeah.
the S&P is down 0.5% and Affirm's up 10.5%. So it's got a lot of things working for it. I didn't see this one, or I probably would have taken it. But it had really good relative strength, not only in price action, but just on a percentage basis. It was up way more than the indices. Maybe had some kind of news. I have no idea. But it was above a key level, which was the previous day high. It kind of trailed back down to that level, formed this little kind of trend line, flaggy looking pattern. And then when it broke out, it didn't really do much for about 20 minutes, but it did hold that key level. And then it's, off to the races, back up again. So yeah, that's a beautiful pattern right there.
Yeah. And the key looking at that, even, as you go, like, could you handle the chop for 20 minutes? And that's the kind of art of it. There's part of it's not scientific all the time. So people are going to have different chop, thresholds that they're willing to hold things through,
Right.
But this is an example where, it didn't break anything. It wasn't really breaking any rules set. And so if you would have held on to it, it would have paid off.
Yeah, I mean, this first little bit of chop, that's not too much, but this set here, I probably would have gotten out, and I probably would have missed that last leg up, to be honest.
Yeah. Well,
but,
like you get the meat,
Get the meat, you probably got a pretty decent little pop of profit there. Definitely would have been out of some. But the other part of it is, frankly, it's what I have going on. Sometimes I like to get out of my office and go to lunch. So I really try to focus on, I've been trying to focus on, and this is something that I really struggle with because I have a lot of deep rooted FOMO of, missing out on good moves. And so I'm really, really trying to focus on getting my directional trades out of the way in the first 90 minutes of the day, and then just being done. Now there's different scenarios, like the day after FOMC tends to be a really nice range day. There are different days that I will make sure that I'm in front of my computer all day. But on an average day like today, I really try to get my 3 trades, which is my max that I can take a day per my plan, get my 3 trades or less, and be done for the day within the first 90 minutes is ideal.
Yeah. The 2 more things if you got time. First off, I'm disappointed in you. I mean, you want to eat lunch? That's crazy. I don't like that, So,
or I have to do the navigation trading show. I can't be in directional trades when I'm doing this.
I get it. I would love to see. Yeah, it's everyone thinks that'd be awesome, but the reality is it would just be like, hey, Steve, because you're just watching the screen, as I would if I was trading.
Well, and I don't mind doing that. I mean, I live stream in the morning.
Yeah.
Several days a week, where I'm streaming and trading at the same time.
Yeah.
So we could certainly do that. I don't know if the time of this show isn't necessarily the best time because you get that midday chop a lot of times. But
maybe one day if the market's going nuts, we can do a little live stuff. 2 more things real quick, and then speaking of FOMO, my mother and my grandmother are in this room right behind me eating birthday cake. So
it is Troy's birthday today.
Yeah,
if you haven't wished Troy a happy birthday, happy 42nd, my friend.
I told my mother, I said, listen, I want to be with my friends. I'm going in my room. Leave me alone, and go from there. So
I want to go hang out with my online friends.
I want to go hang out with my online internet friends. So 2 more things. One of the questions landed from Watson. This is from Landon, but from Watson. Shout out Watson. Steve, you mentioned if stocks had futures. What about the leveraged ETFs like 3X Tesla or whatever?
Trading options on them, or
I
just
guess so. Yeah, the
straight
idea of
leverage?
just saying using more leveraged stocks, I suppose, or stocks
Yeah,
that
I
have
don't I
options.
don't do it. I don't necessarily have a problem with it. You know, the main issue with those things is you don't want to hold them for a long period of time, you know, more than a day or two, just because of that kind of contango roll, uh, downward drag that they have on them. So it's definitely not something to buy and hold, but trading them for day trading intraday, I don't have an issue with it. I just like, I'm trying to cut down on the number of symbols that I watch. So,
Makes
uh,
sense.
not
Makes
something
sense.
that I do, but I'm not,
Well,
I hate it.
to your point, I mean, this I actually think this is kind of important and something I struggle with all the time. I mean, listen to what he's saying. He's saying, I want to trade closer to 9:30 than not, and I want to be done in a perfect world within 90 minutes. Well, if you have 6,000 options available at all times and you're watching all of them, it's going to be really hard to walk away. And so there's plenty of meat, like he's saying, on Mag 7, and then maybe a handful of others. There's plenty, like at least once a day in the morning, there's probably a trade a lot of times in one of those things. And so you can make some good money from it, walk away, have a good day. You know, you don't have to just, we're not machines, you know? And so that's part of it is we're
Yeah,
human.
I've got those boards that I shared with you, and I'm really considering kind of paring those down to only, you know, let's say 2 or 3 chip stocks. I'll keep the Mag 7, and then like two, you know, a couple cryptos, and then the indices. But really, I'm really trying to narrow it down because there is so much opportunity that I would say, if anything, it's you know, you kind of get crippled by opportunity rather than missing something. You know,
Yeah.
you got stuff like this. Affirm is on kind of my main watch list, but it never hit my radar. If I would have looked at the highest gainers for the day, I probably would have seen it.
Yeah.
But I was already kind of out of 3 trades by the time this one's set up. So uh,
Makes total sense. Last question, Steve, if it's all right. Are you, but I know the answer to this, but I think it's important for people to understand. Are you buying shares? Are you buying call options? Or are you selling puts? What are you doing when you say you're trading using options?
yeah, I'm just for these short-term directional trades, I'm simply buying calls to get long and buying puts to get short.
Yep.
You
Yep.
know, I trade you know, yesterday I did a short put vertical spread on SPX to get directional. You know, so SPX was, I kind of thought that it might, I wasn't expecting a quick move. I traded it as a reversal, you know, the pattern that I just talked about. But I thought that SPX might not just shoot up. I thought maybe it would potentially chop around, but kind of have a bullish bias the rest of the day. And so I sold a put vertical. So I will do that too, but for the most part, for what I'm talking about right here and what I did in Hood and Tesla and Meta today, simply just buying calls, uh,
Yep.
and buying puts to go short. And I'm always using the Friday options. So, you know, today it would be the 3 DTE. If I'm trading, like I said, if I am trading options on SPY or QQQ or IWM, which all have daily options, so then I'll usually be going to the 0-day or the 1 DTE options. But for all the stocks that have expirations on Friday, I'm always trading that Friday expiration.
Yeah. No, it makes total sense.
And then I'm typically going a little bit out of the money. I like the bang for the buck when you buy the slightly out of the money options, 1 or 2 strikes out of the money. If you get the push in your direction, that move from out of the money to in the money is kind of the
helps a little bit. That 40 delta, maybe 35 delta.
right.
Yeah, makes total sense. Well, Steve, that was awesome. I mean, that's a fire hydrant for people who want to learn day trading. Go back and watch it. I'll put the PDFs in the show notes. I think it's what you just said is true though. Like you want to keep it simple. I've done day trading before, and I've tried to be cute where it's like I'm going to sell a put spread, and then you get worried, and then you like end up doing some crazy structures just to try, like, you're not locking in anything except for a loss. So just keep it simple. I like that. I like it works well.
Yeah, I mean, with long options, you do have that theta decay working against you, no doubt, and that's part of the reason why I have that rule that I don't want to sit in the trade for more than 30 minutes if it's just going sideways, because that decay will start to eat into your profits, especially when you get closer to that Friday expiration date. Like if you're trading options on Thursday or Friday, it happens even quicker than if you're trading on Monday. So there is that element, but I'm trying to get in and out of these trades so quickly that um, the decay doesn't work too bad against you.
Makes total sense. Well, listen, the delta of this birthday cake is decaying in the background, so I'm going to go do that and go from there. But Steve, thanks so much for showing us that. Just some good stuff, man, and I appreciate you. We'll be back next Tuesday, and who knows? We have the Christmas show next Monday from 12 to 4. There might be a special guest just popping in the neighborhood, so we'll see what happens. But
love it.
Have a great
day. And anyone who, if you guys have topics or things that you want me to cover, feel free. We're open for suggestions. Any kind of topic, anything options trading, I'm down to talk about.
Oh yeah, love it. All right, guys. Listen, have a great rest of your trading day, and we will see you tomorrow. And we'll see you next week, Steve. Bye-bye.
Take care.